Good evening, everyone. Uh, I'm Shashi Mathews. I lead the indirect tax practice at IndusLaw. Thank you, Taxmann, for making me a part of this endeavor. And as you correctly mentioned, you are one of the leaders in research, especially when it comes to tax. And I think most professionals or even students who are on this platform will be and have definitely used Taxmann in the past. And thank you for inviting me for this webinar. The idea behind this webinar was that we've had uh, a mixed bag of a year when it comes to GST. As everyone knows, in the budget there isn't much that happens in GST, but over the last few weeks and few months, there have been substantial changes which have come. There have been some sort of clarifications. There's circular, the GST Council meetings. There are judgments of the Supreme Court, and of the High Court. So we decide to pick out some of the topics which might be as interesting as online gaming and something as technical and procedural as ITC, and share our views with the group, take you through the circulars which have come, take you through some of the interesting judgments which have come. So without any further delay, I'll quickly start off. If you've gone through the flyer, we've put out a list of judgments that we'll be dealing with. We've also put out some of the issues that we'll be dealing with. In fact, after this whole event was conceptualized, some of the judgments and circulars sort of got intertwined with each other. So we'll take you through that also. To begin with, the first interesting issue that came up by way of clarification. Yeah. So this was on taxability of shares held by a holding company in a subsidiary company. It's actually very surprising that the CBIC had to issue a clarification on this issue, because securities, which includes shares, and securities under the GST law is defined as what is given under the Securities Contract Regulation Act. They are considered neither goods nor services under the law. So therefore, the question would obviously arise, why would anybody be issuing a clarification on this? This is because, at least from what we heard in the public domain, there were some inquiries made by the department with companies. Companies were finding it a bit difficult on how to go about this. So the clarification is a welcome clarification for those companies who've got the notices. So this was basically, there is an entry 997171 in the classification scheme, which refers to services provided by holding companies, that is holding securities or other equity interests in companies and enterprises for the purpose of owning a controlling interest. Now, this is what the entry said. Now, simply because there was this entry, there was an apprehension that tax would be levied. But fortunately for us, the CBIC has now come out with a clarification that this cannot be treated as any form of supply. That is because securities are neither goods nor services under the law. Therefore, purchase or sale of shares and securities is neither a supply of goods nor a supply of service. So that is a key point here, that when something is not even considered as goods or services, should it actually be taxed? And probably the CBIC felt that it is better to nip this in the bud and clarify that there is no service, there is no supply of goods. Therefore, there cannot be any GST on this. One very important point, however, even though that there is a clarification, that if any fee or if there is any charge for facilitating such a transaction, that obviously will call for GST. This is in line, in the stock market also, when shares are being traded, there's no GST on the shares. But if there's a brokerage charge, if there's a commission charge, those services, obviously those will be services which will attract GST. While this clarification had come, there was another interesting issue which came up, was that in many structures, a foreign holding company may actually give an ESOP to the employees of the Indian company, their subsidiary in India. So the question which I now is probably already started coming, in fact, we've heard some news about this also, is that this sort of ESOP structuring, which is granted by a foreign holding company to employees of Indian subsidiaries, would that get covered and would that be attracting GST? While there are only news in the public domain on the fact that the department has issued notices, in our view, this should be something on specifically on the facts of the case that should be looked at. But it is highly unlikely that ESOPs which are granted by a foreign company should attract GST. The department's argument here appears to be that the Indian company, the Indian subsidiary, is actually doing an import of service and therefore should pay GST on reverse charge. That is because there is a cost that is there's a cross charge of the cost from the foreign company to the Indian subsidiary. Now that being said, this is still a transaction of shares of securities. ESOPs are recognized to be securities. That's one. Secondly, even an employee would consider ESOPs as a perquisite given to him. So there are many factors that one needs to look at if suppose any of the participants here were to get such a query or such a notice. This is something that needs to be evaluated from these aspects. Now, moving on, the taxability of services provided by distinct persons. I think from the inception of GST, one thing we all know very clearly, that even services, movement of goods, for example, from one state to the other, even if it is pre-GST, it was what we would call stock transfer. Even if it is stock transfer under GST, there is tax that is charged and paid. Of course, ITC will be available, and there are provisions to that effect also. But what actually stumped everyone was the AR decision and subsequently the AAAR decision, Columbia Asia Hospitals, which actually sort of changed the view that was there till now in respect of services, and said that even cost of salary of employees will have to be included and when the cross charge is happening. And that was something that really affected industry a lot. And that case is pending before the Karnataka High Court. But what is relevant is that the service that the clarification that has now come is very helpful. This, in fact, has to be read with the fact that in the future, ISD mechanism, that is the input service distributor mechanism, is going to become compulsory. But for the time being, what is there is that the department has issued a clarification saying that common attributable services which are procured by a head office and passed on to a branch office in other states or within the state also, where they are being given by third-party vendors, you can distribute your ITC either through the ISD mechanism or by cross-charging. Now, this is very relevant because this was a question that was coming up in people's minds, that do I need to therefore take an ISD registration? And the government has been kind enough to clarify that as of now, presently, ISD mechanism is not mandatory and therefore a simple cross-charge is possible. So that is insofar as third-party vendors are concerned, the services, such as internet services or security services. These are services which an HO can procure and pass it on to their branch offices. The crucial clarification which actually came up was with respect to internally generated services. And I think that is where the maximum relief has been given. Though there are provisions to this extent to say that if the person you are supplying to is eligible for full ITC, that person, then the value declared by you will be deemed to be the open market value. So for internally generated services now, there is a specific clarification that has been given that if full ITC is available, then then if the invoice is issued, it is deemed open market value. If invoice is not issued, and then it will be deemed to be a nil value. Therefore, per se, there is the position that was there earlier has now changed. And the strength of that comes from the fact that the rules itself provide that that where full ITC is available, in those cases, then whatever you are declaring in your invoice, that will be the open market value. Now, what happens in a case where full input tax credit is not available? See, internally generated services may still be cross-charged. But again, the crucial part that the clarification that came out was that the cost of salary should not be included. And I think this was a big heartburn for a lot of SSEs when Columbia Asia came out. So invoices, if you're issuing, will be to that extent for the services that are attributable to that branch office, or they are directly provided to that branch office. However, cost of salary will not be required to be included. So that is definitely, I would feel, a welcome clarification from the department. And to that extent, I would also think that now Columbia Asia Hospital and Profi Solutions, which are the two cases which were actually being, which are pending before the courts, those will be decided now in favor of the SSE, and definitely a welcome clarification by the CBIC. Apart from the clarifications which did come out in the last few months, there are some changes, in fact, from October 1st, and that's next month. One of the crucial changes is that the provision inserted under Section 17(5), which pretty much bars ITC in respect of goods or services which are received by a company, which are intended or used to be used or intended to be used for compliance with CSR provisions. Now, CSR provisions, as we all know, are mandated under the Companies Act. So therefore, to that extent, I would feel that this is something that wasn't required actually, but nevertheless, this is an entry which has come, that there will be no ITC available for the 17(5) is the provision that bars ITC straight away for those categories which are given under. Again, there have been differing views taken by various advanced ruling authorities in the past. Now, this will be clarified. This has pretty much been set in stone, unless, of course, challenged, that with effect from October 1st, 2023, for CSR activities, whatever goods or services are procured and received by the person, they will not be eligible for ITC. Of course, the next issue is something that the next two issues, in fact, is something that has been really litigated upon for the last few years. And well, we still haven't seen light of day for some of these. But one thing is now very clear, that ITC will be ineligible where there is a delay in filing the GST R3B beyond the time prescribed under Section 16(4). In fact, in this judgment, which was rendered by the High Court of Andhra Pradesh at Amravati, one of the issues that was raised by the SSE was that if I am eligible under 16(2), if I fulfill all the requirements under 16(2), 16(4) would automatically be excluded because 16(2) is notwithstanding. And to that extent, what was argued was that 16(4) limitation cannot be applied, and the High Court said no. 16(2) is your eligibility condition, but 16(4) is what protects it with a limitation, else it would be forever you would be eligible. So that's something, again, that SSEs need to keep in mind. Finally, on this issue of 16(2)(c), there's a very interesting issue, and I'm sure SSEs are facing it day in and day out. In fact, I remember in 2017, after the law had come, a lot of us had actually, brainstormed on what are the protections that companies can put in their contracts, because it's basically virtually impossible to ensure that the tax that has been charged, which I have actually paid to my supplier, that has actually been paid to the government, and also features in the return. So this is something that has been challenged and is currently pending before 3 or 4 high courts. So that's something that we will actually be waiting to see what would be the outcome in that. Not only that, for the past pre-GST also, there is a judgment of the Delhi High Court. I'm sure everybody knows about that, where the court has said that the purchaser cannot be saddled with a liability on account of a defaulting seller, as long as the other conditions are met. This is also upheld by the Supreme Court. So this is something that, this is a burning issue And now that some of these issues have been ironed out, it is likely that we all will get used to this matching, and we'll be able to live with it. The other issue, and this is one of the cases of the Supreme Court, post which, in fact, CBIC has given a clarification, and it's something that has been litigated for years altogether. And this was on the issue of warranty supplies. And very, very crisply, what the Supreme Court said, and they were actually dealing with a case where a reference was received by a larger bench on a previous case where the Supreme Court had held that credit notes issued by manufacturers, when they are giving in lieu of spare parts replaced by a dealer, which is those spare parts which are covered by warranty, those credit notes actually form consideration for the spare parts. Now, what the Supreme Court has done here is they have actually demarcated this to say that, and let's look at this as a situation which are in fact given in the clarification also. But under VAT, what the Supreme Court has now said is that if the under warranty manufacturer has sent stock to the dealer, and the dealer uses that stock to replace, there will be no VAT or sales tax. But say if the dealer is purchasing from the open market, or using his other purchase stock and then charging it back to the company, in those cases, what the Supreme Court has said is that there is an element of sale that is actually present, and this would have to be. And just as I said, if the manufacturer was buying this spare part from the open market, he would have paid tax. Therefore, the Supreme Court said there's no reason that between the manufacturer and the dealer, when a similar transaction is happening, why should that not be taxed? So on that position, on that basis, the Supreme Court has said where a credit note is issued to offset this tax this purchase that the dealer has done, in those cases, the relevant VAT or sales tax will be applicable. Now, of course, there is a question that would come whether there will be similar demands under GST for the past, etc. So for that purpose, in fact, now there is a clarification that has come, and the clarification fortunately deals with a lot of these situations, and that should be welcome for a lot of automotive companies. So the first thing that the clarification deals with is warranty services when provided without consideration. Now, this, of course, we also have to keep in mind that a manufacturer, a dealer, and SSE, all these three parties may not be related. And in fact, a customer will definitely not be related. In those cases, anyway, if they are done without consideration, there should be no GST. And this the circular actually clarifies this further and says that the original supply of goods by the manufacturer through customer already includes. So if I'm buying a car, my car already, when pricing the car, the manufacturer keeps in mind these particular facts, that parts have to be replaced. There have to be, say, 4 or 5 services which have to be given. All of those values are already understood to be in the value of the goods that is supplied or sold. Therefore, there is no need for a separate GST when warranty services are provided without consideration. Now, of course, if there is a consideration for any aspect even within warranty, and while a car entirely may be on warranty, there might be some aspects of it which are not under warranty, and therefore there will be an additional consideration. In those cases, the CBIC has clarified that there will be GST that will be payable. Now, again, going by the first principle itself, that because the original value of the goods itself was something that was that included the value of warranty or repair services, therefore it's not treated as an exempt service, and ITC reversal will not be required. So this is all, I think the purpose of these clarifications were to sort of ease out the questions that the department has been raising over the last few years, and to avoid a situation where the Supreme Court judgment could be misinterpreted. Now, what happens if warranty services are provided by a distributor without consideration? GST will be levied? The answer is no. where, as mentioned earlier, where there will be any sort of consideration that the distributor is charging, those will be with GST. Now, there are also cases where the distributor provides repair services in addition to replacement of parts, but charges the manufacturer. In those cases, like what was in fact what happened in the case of Tata Motors also, they said that GST would be payable on such provision of service by the distributor to the manufacturer, and the manufacturer would be entitled to avail the ITC of the same. So that again should not be a problem. Some situations which have been, some scenarios which the circular actually puts out for our benefit, and I won't take much time on this. One of the key points in this is that if there is so there are two situations that arise when an extended warranty is provided. And again, taking the example of cars, you may choose to take an extended warranty at the time of buying the car itself. In those cases, what the clarification now says is become a part of the value of the original supply itself. And therefore, it would be a composite supply, and the principal supply being the goods which are being supplied, GST would be payable accordingly. However, if you are purchasing it at a separate, in a different point of time, say later on after 2 years or after 3 years, then depending on the nature of contract, GST would be payable, and this would be likely depending whether it's only for goods or for services or for both. The decision will have to be taken accordingly. So yeah, so this is in fact, I think we might not have much time, so I will not go through many of the other questions. And as I understand from the Taxmann team, this PPT will be shared with you. So so yeah, so that's that. Now we come to a very interesting position on online gaming, and I'm sure a lot of us who have been either as advisors or in the industry or generally keep abreast with the news on GST would know that online gaming has been something that has been really fought over and litigated by different departments. Earlier, it was the income tax department on TDS, on winnings, and now it is the GST department. Earlier, when the income tax issues were there, those have been actually clarified in the last budget. And there has been some movement on that, and things have now settled down. But GST was always something that was a big issue for the department and for assessees. And that actually led the GST Council to call for a GOM, a group of ministers, which were given a reference that you tell us how online gaming, what online gaming would constitute, what would be the value on which tax has to be charged, and what would be the rate. Now, while the GST Council was deliberating this and while the GOM was deliberating this, one very important case that came up before the Karnataka High Court was on the issue of, was in the case of Gamescraft. And this is in fact a judgment which has now gone to the Supreme Court and has stayed. We'll get into what that is. But let's look at what the argument in Gamescraft was. First thing, what the revenue argued was that tax has to be charged at 28% on face value of each contest. Now, face value, the principle of taxing on the face value is something that comes from betting and gambling. Under GST, actionable claims are generally outside the purview of GST, except actionable claims pertaining to betting and gambling. There are valuation rules which specify that wagering in online, in betting and gambling, the tax has to be at 28% on the value of the bet. Now, that is insofar as betting and gambling are concerned, which historically there has been a distinguishing factor between betting and gambling and other games. That being one is a game of skill and one is a game of chance. Online games where wagering happens, where proper betting and gambling happens, any other betting and gambling that would happen offline, all would come under the ambit of game of chance, and something that that requires a certain amount of skill, that would come under the ambit of game of skill. Now, what the department was actually arguing here was that the moment you put money, and the moment, whether it be game of skill or game of chance, it does not matter. The moment there is money that is involved, there are stakes that is played, there are stakes that are played, there are bets that are placed. Those would be in the nature of supply of actionable claims, and 28% GST should be on the face value of each of those bets. Now, this was a notice issued to Gamescraft, and in fact, Gamescraft predominantly offers rummy, which historically has been held to be a game of skill, and not only by the Supreme Court, multiple high courts, even before Gamescraft judgment and even after the judgment, during the arguments, other high courts have also held that rummy is a game of skill. Now, therefore, it being a game of skill, it is not the same as betting and gambling, which is actually a game of chance, and therefore attract a higher tax under GST. Now, because it is a game of skill, the gaming operators had the position that if I'm allowing anyone to play a game of skill on my platform, if I'm charging them a platform fee or a service fee, that I'm paying GST on at 18%, because that is what the actual classification was. And Karnataka High Court has actually upheld this position, that judicially it has been settled that rummy is a game of skill. And merely because there's money involved, merely that because there's a stake involved, even though it's a game of skill, would not take it into the universe of betting, gambling, or wagering. And only those activities which actually amount to betting, gambling, lottery, those would attract a higher rate of 28% on the face value. So it was on that basis that the High Court actually quashed the show cause notice that was issued. Now, what has happened after that is that the Supreme Court has actually stayed this judgment of the Karnataka High Court. A side impact of that will be that if other operators are receiving such notices, they will not be able to take the benefit of Gamescraft from Karnataka High Court. Now, let's look at what the GST Council says. I've already given you the history of the GOM and the GST Council. Now, because the GOM could not actually come to a consensus, the GST Council decided that we levy 28% on activities which qualify as online money gaming. So it doesn't matter whether you're a game of skill or game of chance, as long as it's an online game, which is played with money, where there is an expectation of return in money, those have been brought under a single umbrella called online money gaming. And any deposit that a user plays with a platform for playing such a game, that would attract GST at 28%. So to put it in simple terms, if you put 1,000 rupees for, in the case of, let's say, Gamescraft itself, if you put 1,000 rupees for playing rummy, then what the GST Council has said, and now it's in fact become, it's also come in the form of an amendment, is that these will attract GST at 28% on the whole amount, and not just what is charged, what is collected by the platform operator. Now, how has this been done? As I said earlier, actionable claims are outside the purview of GST, except those pertaining to betting, gambling. Now, these have been amended to say specified actionable claims. So specified actionable claims are made taxable. Regular actionable claims are not taxable under GST. Specified actionable claims will be online money games, in addition to betting, gambling, lottery, casinos, and horse racings. Therefore, the test now, as per the amendments which have been done, is that where you put in money with the expectation of winning money or winning something that's worth money, and in fact, the amendment has also extended to virtual digital assets. In those cases will straight off come under online money games. So I would think that a casual game or a subscription-based game, in my view, would not attract this the higher rate of 28%, because there you don't play with the expectation of return in money. For example, there are games such as PUBG, which allow you to take a subscription, or Battlefield, which allow you to take a subscription. These are games played for leisure and may not actually result in any winning in money or money's worth for the user or the gamer. In those cases, 28% will not be applicable. Now, this has further, the next step, of course, is valuation. And what the valuation rules now say is that the deposit made at the initial stage would attract the levy. And if of course you play with that game, you win something, you'll attract income tax, which is a separate issue altogether. But there won't be any additional GST on subsequent bets using that same money. Of course, if you put in more money, every deposit would attract GST. And what is crucial, however, here is that any refund of such deposits, even if a player chooses not to play, say I put 1,000 rupees, and instead of putting 1,000 rupees, by mistake I put 10,000 rupees, GST is charged on the entire amount. There won't be any refund of the GST, even if the player takes out his other amount also, the deposited amount also. No GST will be refunded. And that's a very important and crucial point, in fact, which has come in the rules, which we'll see how it plays out in the next few months. Separately, the surprise bit was there are specific provisions which have been introduced for non-resident gaming operators. And in fact, non-compliance with this, there have been special powers given to block such platforms also. So what is important, therefore, now is that online gaming operator itself is deemed to be the supplier of such actionable claims. If it is outside India, a non-resident gaming operator, there are registration provisions for them. And there are also coercive action that is proposed, that has now been brought into the law for GST non-compliance. So in these conversations in the past, we heard in the press conferences that were given, the government had stated that these are only clarificatory in nature, and they are only meant to clarify the law which is already understood. Going forward, what we understand is there are state governments will have to pass amendments, and those are still in place. The Amendment Act itself has received the assent of the President. There is an intention to implement the amendments with effect from 1st October. The government has said that they will look at this, at reviewing this post 6 months after the amendments actually kick in. And we are expecting that there will be show cause notices that will be issued to gaming operators on this. But for now, what we have is the Gamescraft judgment has been stayed by the Supreme Court. So that means other operators or other SSEs who are planning to take similar grounds may not be able to take the benefit of the Gamescraft judgment itself, and their cases will have to be independently decided by the relevant courts. Now, the impact of this, in fact, a lot has been said on this issue over the last few months, because this has seen some direct impact on business. In fact, the industry is reeling from the impact of this. In fact, I would think that once the tax actually comes into effect, we'll see more changes or more announcements, I'm guessing. There are companies which are looking at different operating models. We've already heard of some companies which have cut down their workforce so as to reduce their fixed operating costs. Now, we are hoping that the government, once this is, the council will relook at this, because the 28% tax is really high, and I would think it is quite a big dampener for an industry which has been doing pretty well for the last few years, and in fact was just waiting to boom. And this may call for some sort of tweaking in the near future, probably after the 6-month period is over. So yeah, that is on the online gaming piece. On the other, finally, the last issue that we had was on the user development fee. So the user development fee is something that is charged by airports. And the department here had taken this issue that the user development fee, which is charged and collected on tickets, should be leviable to service tax. So genesis of this is that the airport operators such as Delhi International Airport, Mumbai International Airport, and Hyderabad International Airport that actually received show cause notices, which were adjudicated by the adjudicating authorities. CESTAT had remanded it after it came to the CESTAT, and in remand, while the benefit of cum duty was given, what the adjudicating authority did was still confirm the demand against the airport operators. Finally, what happened is the CESTAT held it in favor of the airport operators on the ground that there is no service that is actually provided. And this came up to the Supreme Court. And in fact, it was the department brought this to the Supreme Court in appeal. And recently, the Supreme Court gave its judgment, where it upheld the position given by the CESTAT that the user development fee is actually not leviable to service tax. The reason being that after going through what the Airports Authority of India Act 1994 said in Section 22A with respect to UDF, and in Section 22, what the court said is that this is actually a fee that is collected, a statutory levy that is there in preparation for the future. So this is not something that is correlatable to an actual service that is provided at the airport. This is not correlatable to any benefit or any other incentive that a customer might get. But this is actually, and the fact that in fact, the Supreme Court went into this question that there is an escrow account, all this money goes into that. All of that, the Supreme Court said doesn't matter. Clearly, 22A was brought in to prepare for the future. So a passenger who's walking into the airport today will not actually have the benefit or will not, his payment of UDF is actually not correlated to any specific service that he is using. In fact, it was a revenues condition that this is done for funding and financing specific renovation, maintenance, development, and upgradation of airports. And because the airport service definition was widened in 2012, the revenue said that everything that is provided in an airport would come under the airport service. And that is where the Supreme Court has actually deferred to say that it is a statutory exaction. It may go to an escrow account. It may not go to the government treasury, but there is no service that is actually provided to the consumers on account of charging of the user development fee. And the user development fee is something for the future. So while the 3 airports in Delhi may not actually have a benefit of the user development fee that is collected, in the future, if a new airport of a substantial redevelopment of this airport has to be done, this amount will be used for that. And therefore, the Supreme Court in these words actually reiterated what was said in Bhayana Builders about 5 years back, when the court said that there has to be a nexus with the service rendered, an amount charged, and the value of goods or services that are provided. Otherwise, there cannot be a taxing incident. So that is some of the recent changes which have come. I see some questions from the crowd. I'll just have to. Okay, I don't seem to have. Yeah, I have. There is someone who's commented saying that the ESOP plan granted by foreign employees should have no GST implication. Absolutely, sir. I agree with you on that. It is an issue of securities and should not attract GST. Somebody has commented that AP High Court judgment is only applicable to AP state. To some extent, yes, that would be applicable. Hope participants will be sent a copy of PPT. Yes, the participants will be eligible. So in case of distinct persons, for internal services, if full ITC is available and invoice is not issued, whether the other state will not raise query as GST is not passed on to that state? No, because now the clarification has come that if full ITC is available, then even if an invoice is not issued, the value will be deemed to be nil. If an invoice is issued, then whatever amount is given in the invoice, that will be available to the that will be taken as the open market value. This is based on the proviso that is there under Rule 28, I would believe. Yes. Now, because this is a clarification that has come from the CBIC, this is binding on the department, and therefore I really don't think this issue would come up by another state where the GST is being passed on. Whether ITC eligible on CSR prior to 1/10/2003, as per what I have right now, it is only from 1/10/2023 because that's what the date of notification is. I don't think this has been given retrospective application. Whether GST applicable on the bonus given by the gaming company to the player on deposit amount. Like if you deposit 1,000, you will get additional 10% as bonus amount by applying coupon code. So GST will be on 1,000 or 1,100. Okay, so this is so basically the question is whether if bonus is being given, whether GST would be applicable. So first things first, GST would be applicable on the 1,000 rupees that is deposited. What I understand is the valuation rules do talk about paid or payable or deposited. So one will also have to see what is this bonus amount, how is this bonus amount being calculated. In some cases, the bonus amount is not withdrawable. All these factors would be determinable to say that the additional 10% that you receive as bonus may not attract GST. In some cases, they may. That depends on the terms and conditions of that particular company. GST on deposit is including GST or excluding means, okay. So this is something that is completely the prerogative of the gaming operator, because even the GST law recognizes that if you are not separately charging GST, that means in your example that Mr. Kochhar has given, if 1,000 rupees is being collected and you get an invoice for 1,000 plus 28%, that is also possible that you pay 1,280 therefore from your payment gateway. Or it is also possible that the 1,000 includes the 28% that is chargeable. So the remaining amount, a rough calculation, I can just tell you, say 720 rupees will be the playable bonus that will be available to you. So that I hope that clarifies this issue. And as I said, this is something that can be done both ways. It's not something that is required. There's another. Can you please give some brief on bonus part again? So I was saying, as per the valuation rules, they say paid or payable or deposited. So the nature of the bonus itself will have to be seen on whether that bonus will attract GST or not. And I'll give you an example that where the bonus is given to you for playing XYZ game, which is say a free-to-play game, or not a free-to-play game, but it's let's say a practice game. In those cases, maybe GST will not be applicable because there's no money's worth that is being won. On the other side, if it leads to actually increasing your deposit amount, depending on the terms and conditions, there could be an argument that bonus will get pulled into the entire tax amount. Okay, I guess I've answered all the questions which have come. Let me just see if there are any more questions. No, I hope everyone has had a good time listening to us. I think there is, okay, so for excluding, which one will you? So, Mr. Kochhar, I would suggest we take this offline because I've just been prompted that we are running out of time. We can, my email address is given on that. We can definitely connect. I'm also there on LinkedIn. Please drop me a message. We can discuss this in detail. Shouldn't be a problem. Thank you all. Thank you all for attending this this webinar.